In today's video, I'll talk about some new data for Dogecoin and the crypto market and what Elon Musk just said about Doge in his latest tweet. But before we talk about Elon's latest tweet for Dogecoin, let's first get some context. Yesterday, we talked about how the Dogecoin co-founder Jackson Palmer threw shade on Elon Musk for no reason. After that, Elon shot back at him, saying, "You falsely claimed lame snippet of Python gets rid of bots. Okay, buddy, then share it with the world. My kids wrote better code when they were 12 than the nonsense script Jackson sent me. Like I said, if it's so great, he should share it with the world and make everyone's experience with Twitter better. If he does, you will see what I mean." Jackson Palmer is a tool. And Palmer always forgets to mention that he never wrote a single line of Dogecoin code. And then Billy Marcus, who's another co-founder of Dogecoin, stepped in to say, "The people after us did exponentially more than either Jackson or I did on the code base. I think I wrote like 20 lines of code and copied the rest." And right after that, Elon replied to his tweet, finally talking about Dogecoin. He said, "You're humble bro." Billy's sense of humor and irreverence is a big part of why people love Dogecoin. Now, while it may not be apparent, this tweet had a massive impact on Dogecoin. Before we talk about it, let's look at some data for the crypto market. Popular crypto analyst Benjamin Cowan says 3 metrics indicate Bitcoin could see a price bounce in June. Remember that we're talking about Bitcoin simply because it has a huge correlation with Dogecoin right now. It currently stands at more than 0.95, which is too high to ignore. Coming back, in a new strategy session, Cowan talked about the first metric, saying that a Bitcoin rally is a correcting US dollar currency index. He said, "We know that the US dollar currency index, when it's moving higher in a parabolic rally, we know Bitcoin goes down. We've seen this many times in the past. And furthermore, if we just simply pull it up, you can see that over the last several months, the dollar has been in a parabolic rally. However, recently, you can see it's pulled back a bit. Now that does not, unfortunately, mean that the dollar rally is over. It could just be taking a break for a while. But certainly looking at the dollar have this pullback leads us to believe that risk on assets could start to do well for a few weeks." His second point is that the S&P 500 and the Nasdaq have had pretty strong bounces off their local bottoms. He notes that crypto has yet to follow those moves. He said, "The reason, I think, is because we are in a macro risk-off time, and so I would argue cryptocurrencies are inherently riskier than equities. So equities are the first to move when it looks like we might be getting at least a few weeks of some relief, and then as long as that sustains, then crypto will kind of be next in line to go up as well." Another thing we need to talk about for Bitcoin is that the number of Bitcoin under Coinbase custody for institutional clients rose by 296% since Q4 2020. This just means that most investors decided to hold onto their investments despite Bitcoin's price being down well over 50% from its all-time highs. Kai-Young Ju, CEO of CryptoQuant, said, "For most cases, the same amount of Bitcoin is still in the custodian wallets, which flowed out from Coinbase for highly likely institutional purchases in December 2020. So basically, if this is the case, then these institutions are currently sitting on 30% profits from their Bitcoin investments. Also, their decision to not sell off their Bitcoin positions, even when Bitcoin has plummeted by more than half, is a testament to their strong holding sentiment. That also points to institutions' ability to withstand additional declines in the Bitcoin price at least until it drops below the investors' break-even level of 23K, which is still pretty far from here." But then, Laurent Kassis, head of Europe at Hashdex, said that this is a short-term trend for Bitcoin and the current signals are not substantial and could reverse very quickly. She said, "I still see a trading range in the 30K level, which could break as downward pressure is still compromised." And then, Pablo Jotter, financial products manager at Storm Partners, also said that despite the rebound for Bitcoin, the fundamentals have not changed yet. He said, "We might see Bitcoin going further upwards to 35K this week, as some short sellers will get liquidated and will need to buy back, but we still remain bearish for the short term." We also need to remember that the total year-to-date inflows to all crypto-backed funds currently amount to $520 million compared with inflows of $5.9 billion the same time last year. And this is quite bearish, so we do need to be careful about our next move. Now let's look at Bitcoin's chart for a minute. So Bitcoin's long-awaited breakthrough from the consolidation channel could be a setup for a rally to 40K, which would be its primary reversal signal, which has been in a downtrend since last November. According to the daily chart, Bitcoin has successfully bounced off the June 2021 support that became the foundation of a bull run to almost 70K. Even though it has gone back to 30K, it still has the momentum from yesterday. The daily chart shows no resistance levels ahead, except resistances formed by technical indicators like moving averages. The first EMA resistance that Bitcoin needs to break is the 50-day resistance line, which acts as a guideline for both up and downtrends. The breakthrough would usually indicate a trend reversal for an asset that moves in either direction. Now let's look at an important prediction. The CoinMarketCap crypto community considers that Bitcoin will soar 30.06% from the current price to trade at 41.1K on June 30, 2022. And that is the average target that is being based on the votes by 34.4K members of this community. The price projection is based on the average of the last 6 predictions provided by the crypto community, which has historically forecasted Bitcoin prices with an accuracy rate of 80.3%. And we know that 80.3% accuracy is really high, perhaps even higher than Plan B himself. Moving on, another prediction came Sky Bridge Capital founder Anthony Scaramucci. He talked about what he believes will be the catalyst that brings the crypto markets back to life. He said that there are billions of dollars of capital entering the space, including the Andreessen Horowitz $4.5 billion capital raise that they announced this week. He said that the use cases are going up, wallets are going up, and there's exponential growth in the industry. He then talked about the ETF. He said, "When we get the cash ETF, I think we'll be off to the races. And remember, Fidelity made an announcement that they're putting this stuff in their 401k product offering, so I think very good times are ahead. We just have to be patient." But still, a recent Deutsche Bank survey showed that the majority of investors still think that Bitcoin is in extreme bubble territory. This just means that despite everything and all the indicators, the FUD is still very much there in the market. Still, the key finding is that the share of those who view Bitcoin as the most extreme case of bubbliness has declined significantly compared to March 2021. Talking about predictions, another one came from Alex Mashinsky, the CEO of the Celsius Network. He said that there's no way that inflation will wipe out cryptos. Mashinsky said that he foresees the crypto market recovering. He said, "Even JP Morgan issued a report this week saying that maybe the crypto sell-off is overdone, and they see a rebound to the 38K level from where we are today. So I think we will see a reversal over the weekend and into next week." He also said, "Remember, when Bitcoin recovers, it originally recovers 5 to 8x of where it was, or even more." Coming back to some data, let's look at what the whales have been up to. So last week, Crypto Insights firm Santiment revealed that the number of addresses holding between 100 to 1,000 Bitcoin was on the rise. They said, as Bitcoin continues treading water at 29K, the amount of key whale addresses continue rising after the massive dumping from late January. We've historically seen a correlation between price and this tier's address quantity. Also, the world's richest non-exchange Bitcoin whale is adding more to his holdings as the market is rebounding. The wallet has added 806 Bitcoin over the past 7 days. Coming back to Dogecoin, just last week, a whale identified as Martian Manhunter bought an incredible 68 million Dogecoins. That was worth a whopping $5.6 million at the current price. Now, as promised, I'll talk about the effects of Elon and Palmer's recent feud on Dogecoin. It says here that Dogecoin is up 192% in social engagements. Basically, according to the data presented by a crypto social intelligence agency, the amount of social engagement with Doge increased 57% over the past week and 192% on the last day of May. Looking at the monthly stats, which break down periods into days, we can see how social engagement was equal to 81.11 million on May 29 and gradually grew in the last days of the month. As a result, their number increased by almost 4.5 times, reaching 340.42 million on May 31 and 350.89 million on June 1. And as I've been saying, Elon Musk's effect on Dogecoin will not fade anytime soon. I believe that Doge will see another rally when Elon announces the new Doge 1 mission and the Twitter subscription payment news.